start?
Yep. But yeah, go. You start.
Welcome, everyone. Thanks for coming. My name is Melissa Armo, and I own a company called the Swoosh. And tonight I am going to do a lecture. It's going to be a very informative, educational, and interesting lecture about how you can successfully trade the U.S. stock market as a professional. If you've been thinking about becoming a professional trader, you're going to listen tonight, and maybe it's something that will be of interest to you and you can pick up some tips. So what are we going to talk about tonight? First, we're going to talk about why you may want to trade. We're going to talk about the pros and cons of that. Second, we're going to talk about trade examples, and we're going to go over different charts. Third, we're going to talk about my strategy. My strategy in the market is called golden gaps, and how do I use it daily, because I'm a day trader. And last but not least, we're going to talk about, is it possible, something that I call the Trump phenomenon. As many of you know, I live in New York City, and the U.S. presidential election was yesterday, November 8th, and Donald Trump won. And we're going to talk about that and how there's a lesson to be learned there to help you be more successful with your trading. So let's get started. Why trade? Why might you want to trade the market? You might want to trade the market because you might not like your job, and you might be looking for something to do that you enjoy and can actually make extra money. Or maybe you do like your job and you want to make more money than you're making currently at your job. What I do, day trading, only involves a half an hour a day of actually trading, and I do about half an hour prep work every morning. So I take trades between 9:30 and 10 a.m. Eastern time, and I prep in the morning before the open. The U.S. market opens at 9:30. So if you have 1 hour a day to sit down and be in front of your desk to trade, you can do it, and you can make extra money. Now, let's look at some charts. We're going to pull this up, and we're going to see what's going on here right now live tonight. Actually, here we have. So this is the, actually no, this is Google. Okay, we're going to look up the market. Actually, no, let's look up Facebook. We're going to look up Facebook. Let's see what Facebook did today. We're going to use Facebook as an example because Facebook had a gap. So, do you see this bar right here? Okay, this is a candlestick. So, what are the pros and cons of trading? Well, all you need is charts like this, and I trade from my home. You need a brokerage account. So it's convenient because all you need is a trading account and a computer with an internet connection and live charts. So here you see this is a chart of Facebook, okay? So there we go. This is a daily chart. This is going all the way back to the last few months of Facebook. I'm sure everybody knows Facebook. You've heard of the company. I trade a different stock, a different company every day. One of the pros is that you can make money in the market and you have the money the day that you make it. For example, if you get up tomorrow morning and you make $500, you get paid right away. You don't have to wait for a paycheck. You don't have to wait 2 weeks or 1 week or a month out. So that's terrific. That's a great thing about the market. And like as I said, you work from home. Now, what are the cons? The cons are that when you take a trade, like Facebook rallied today. This is the daily bar here today on Facebook. This was the day of the gap, which we're going to talk about in a minute. This was when the earnings happened. But what are the cons? One of the cons is that you can lose money in the market trading if you don't know what you're doing. Because the only way that you can make money trading is by taking risks. So how much money you make depends on how much money you risk. It's about size. For example, if you take 5,000 shares of a stock like Facebook, and I'm just going to use this example here because it was the day of the earnings. The open here this day was 122, low on this day was 119.50. So for example, if you shorted Facebook from the open down to the low, and you had 2,000 shares of it, you could have made well over $5 grand, even if you didn't get out in the low. So this is one of these ones where you could have shorted it using my strategy. So you've got to know what to do. Many people, though, who want to trade the market don't understand how important it is to know how to think and act like a professional. Even if you want to do this on the side, even if you don't want to be a full-time trader like me, even if you want to do it as a sidebar, part-time, or have your other job or business, you still have to act like a professional because of the fact you're risking money in the market when you do something. And the only way to make money in the market is what? Getting the stock in the right direction. In other words, if you went long Facebook on this day, I'm going to blow it up again. If you went long Facebook on this day, the stock sold off on the day, you would have lost money. The only way you would have made money on this day is by going short. You would have had to short the stock on the day in order for profit, okay? So it is extremely important, no matter what you're doing, if you want to put any money invested in the market at all, you need to know what you're doing. And if you know what you're doing, you can do it. So it's really that easy. Now let's talk about some trade examples here. Let's go back and let's look at the 1 minute chart of, let's go back and look at the 1 minute chart of Facebook from the day. All the way over here. Actually, let's just go all the way over to the day of the earnings. Let's just see. So what do? As I was saying, I like to day trade. I trade on a 1 minute chart to take my entries. So I pick the stock I want to trade based on the daily chart, and I look to enter the trade to take the trade on a 1 minute chart, which is what this is. Okay. So here's a 1 minute chart of Facebook. The stock, okay, you can see in here, dropped. This is a drop in price. So you've seen how the stock fell. Okay. Now, how do you make money as a trader when a stock falls? You can short it. For those of you that don't know what a short is, it means that you are looking at the stock and you can take a position short to the downside. You're betting that the stock price is going to drop. So you're getting in it and you're taking the position, betting that the price is going to drop. That's what this did here. And it did this over here. This is on the day we got here. This is the day of the earnings. So, getting back to this, the stock gapped down. Now, I was saying we're going to talk about what I do. What I do, my trading method, my trading strategy, which is what all people need in order to be professional traders. You need a strategy if you want to make money. You have to have something that you look at in the morning and gives you a reason to do the trade. This is not about the entry. The reason that anyone, me or you, would ever take a trade has to be based on the strategy. In my case, I trade a strategy that's based on stocks gapping. So the 1 minute chart of Facebook, like up here the night before, this is before the earnings reported, was approximately around 27 bucks. The stock had earnings and then it gapped down. You see where it gapped down to? Again, it was around 122. So the stock gapped down $5. So what do you do with that? Again, how do you make money in the market? You go long or you go short. You have to get the direction right in where the stock's going to go, and you have to get in it correctly to make any money. So the strategy is the stock gapping. If you don't know what a gap is, now I'm going to explain it. A stock gaps when the opening price at 9:30 when the U.S. market opens is different from the close at 4 o'clock Eastern time. So how many stocks gap in a day? Almost every stock gaps every day. It's just a question of finding gaps that move. Many gaps I play are earnings gaps like Facebook, but not all of them. For example, there were a lot of gaps in the market today because the market gap, the overall market, the QQQs in the SPY. So gaps can happen for news, they can happen for earnings, they can happen for something like that happened with the election today. You never know, but you're always looking for an opening price that's different from the closing price. So in this case, the difference was approximately $5. It closed up here and opened down here. Okay? So that's the strategy you're looking for. You're looking for stocks that gap if you trade with me. Okay, this is what I do. Now, how do you know whether to go long or short? How do you know what to do with this? Let's go back and look. This is where it all comes into looking at the daily chart. I'm just going to make this one a daily here. So we're going to look at a daily chart. We're going to go back to, as far as I can go back, we can go back to 1999. Well, Facebook wasn't open then, but I'm just showing the whole big picture here. So this is a daily chart of Facebook. And Now these bars are really, really small, but I wanted you to look at the whole picture here of the stock. So how do I determine, again, if I'm going long or short it? First, I wait for the stock to gap. Stocks can gap down or they can gap up, okay? Then I created a method, a system, which is where the professional part of it comes into play, where I rate the gap using a criteria. It's a checklist. It's a 26-point checklist that I use every morning to determine if Facebook on the gap, going back to this gap up here, I know it's really small, but you can see it. You can see the space here. Okay, this is where the gap is happening. Here, I'll just blow it up again. There. This, I rate to determine what to do, short it or go long it. So if you have a share size amount and a stock drops $1, for example, if you would short a stock at 122 and the stock would drop to 121, guess what? You get 5,000 shares, you make $5,000. But you have to get the direction right. So it's first you have a strategy, then you implement the system, which is the 26 points to tell you is it a long or a short, and then you go on the 1-minute chart, which we were looking at right here, and you look to take the entry. So this is what I do. This is what I do as a professional trader, and it's something that you can learn how to do, and it's something that I teach people in a class. I think it's really important if you want to risk any money at all in the market to understand what to do. You can do it yourself over and over and over again, losing money, making money, losing money, making money. But many people can't go the distance to figure it out that way because they run out of funds. And not only that, more important than anything else, people then feel frustrated with the market. Now let's look at that. We're actually gonna look at the overall market because the market had a tremendous rally today after it was down huge in the futures last night because of the election. So if you don't trade, you're not going to understand all of this here, but if you do trade, you're going to get this, and we're going to talk about it. And I'm still going to explain it for you. So I'm going to pull up the SPY. Now, this is the spiders. Okay, it's an ETF of the overall market, one of the ones that I look at. So do you see this here? This bar here today, I want you to take a look at. This is a massive body bar. This is the biggest rally that the market has had in weeks. This is bigger than the bar over here. Do you see this? This is a huge rally for the market today. So I'm just going to look at this whole thing and tell you what happened. The market really didn't gap down that much today. You could say, well, Melissa, why didn't you short that today? Because I used my 26-point criteria and saw that the market wasn't a short. In fact, the market was a long. So there was a news reaction that happened from the election, from the futures last night into this morning, which was a long time, hours and hours and hours and hours. At one point, the market was all the way down here, and then it was here in the morning, and then by the time it opened, it was up here. But do you see the volatility? So how do you make money doing this to pay your bills or do it as a job? You're looking for volatility. You're looking for volatility of something that moves in a predictable way. That's, oops, there we go. That's how you do it. If you try to short this market today, you lost. I want to tell you something here. All of these candlesticks have happened, all this trading data, the market fell. This is all before, this is back like the last month and a half, 2 months. You see this? There were shorts in the market that were trapped. One of the reasons the market had this huge move today is because shorts had to scramble to cover, besides the fact the market actually got bought. So getting back to the concept I was talking about earlier about how to become a professional trader and what you need to focus on, you need to focus on not just having a strategy and not just taking the entry and the position size to make the money and not just looking for volatility and momentum, not just getting the direction right. You have to look for institutional positionings that will help you predict where it's going to go. Because institutions move the market. I can't talk about this enough. I could talk about this for days and weeks and months and years. This bar that happened today, this, in fact, where did we end up closing? Let me just look at this. Low in here today was 212.34. High today was 217.10. So the market almost had a $5 rally. That is a big move for the market, okay? You see here the size of the bars, oops, how big this is. The point is that institutions bought in this bar in here today. So it's about the idea of who's in control. Who's in control of the market here? And again, I'm going to blow this up against this little thing. Who's in control? Now, again, if you're brand new to trading, you may not know how to read a chart. If you're not and you've been trading for a while, you would easily see that, and you would easily say, who is in control? The bulls are in control, Melissa. The bulls are in control. So therefore, you go in the direction of control. The direction of control is to the upside. The direction of control was never shifted here to the downside. And you can say, well, it was temporarily shifted. What does temporary mean? A temporary for a day, 1 day, 2 days, 3 days, 4 days, 5 days? This move here, 100% retraced this drop-off that took 2 months to happen in 3 days. And by the way, we're higher. We're higher probably tomorrow. In fact, we are either open neutral tomorrow and rally up and make a brand new all-time high. We're so close to make another brand new all-time high. It's going to do it sooner rather than later because the election's over and all the panic and everything is already out and done and happened. Everybody knows the results. Or we open up tomorrow and rally and do it. We can have another gap tomorrow. All right, let's get back to what I was saying. The point I was trying to get to is that in order to make money, that you do this for something that you do for a job, you have to look at who is in control. In this case here, people may not have known who was in control. Well, let's go back. Here, before all of this happened, you might not have known who was in control. You might have thought, okay, that the bears were starting to take control of the market because the market went up here, made a brand new all-time high. This was in the summer of this year. We did do it. Then we couldn't go higher. We couldn't do it. We got down here. This is a big sell-off that happened. We went sideways, 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 fell into support, and it looked like we weren't going to go higher. And then all of a sudden this happens, and then this is what upsets people sometimes. They say, oh, but you should have never been short this. How do I know why? How did I know to be able to predict that we do this and we're going to make a new high? Because the institutions that are in control of the market are controlling it to the upside, not to the downside. So the way to make money is to be with that positioning. You got to be with the people that are controlling this chart, and in this case, it's this buy. But I could talk about anything at all. In fact, let's go back. Let's talk about Netflix because I love to talk about Netflix because I just love Netflix. Oops. This is loading. Oops. I keep losing all these charts. I lost them. Alright, I gotta bring up the daily again. This is an exciting screen. It's very sensitive though. It's highly sensitive. Like a shock. Alright, here we go. So this is a daily chart of Netflix. Getting back to what I was saying. Netflix had earnings. It did almost the opposite of Facebook. Netflix closed here around 99 bucks, something like that, the day of the earnings. Then it gapped up the next day, all the way up here. It was like 20-point move. It opened around, what did we open? Yep, we opened around 116.50 and then we rallied on the day almost over 120. And then we rallied again 10 points after that. So getting back to the control idea, if you went long Netflix, you made money. The control is to the upside here. So the control on the side of Netflix is up, it's not down. So you have to be long the stock. Now, a lot of people that are traders look at this, and again, this is not a professional way to look at it because you're not with the people that are moving the stock. Some people, you can see here the stock fell in. Some people are short this in here, thinking that Netflix is going to drop down in here and fill this. Now, this is a level of support in Netflix, but the stock isn't going to fall anywhere back there anytime soon. So people are in this thinking it's going to keep dropping or drop down in here. This gap here that happened was so powerful. It could hold for the rest of the calendar year. It could hold all of next year. I don't know if it does, but it very well could. If you're short this stock right now, you're in the wrong direction of the control. So the professional mentality for people that want to do this for a living to make money consistently, and this is extremely important, has to be looking at the chart and saying, who is in control of this? There is always someone in control. You may not be able to see it, but there is. How am I able to see it, to predict it, to make money in day trades or swing trades or options with my method? Because I read the gaps. I read the gaps. And I read the gaps using my rating system. Now, it's a scoring. It's a scoring like I check it off. It's a scoring, I do it. And I write it down every morning. And you don't need 26 points, but you need to get 20 points or more of every stock that you trade. If it doesn't get that criteria, then you don't do it. So I usually do one trade a day. It seems like, gosh, there's so many stocks out there, but you only need one every day to make money in the market. That's all that you need. Simply for the fact that these things move so much, so fast, so quickly, that if you take the right position size at the right time of the day, get in and get out into the move, you can make money. It is so easy to make money when you're in something correctly, in the right direction. I mean, this stock just rallied up, just like today in SPY. There's some charts here. If you made money, if you were in a SPY today, it was so easy to make money. And I'm going to show you one more thing, and then we're going to talk about something else. Here, I want to show you the 1 minute chart. This is the 1 minute chart of the SPY today. And here we are, moving the charts that take forever. There we go. Okay, so this is 2 days ago. We're going back a lot of data. Just stay with me here. Okay, this is today. Now, guess what the market did today? It opened and swooshed. So I watched the market today because I wanted to see what would happen. This could have fallen today. The market could have fallen. The futures were down a lot last night. Trump won the election. It was unexpected, but it didn't. Now, how would you have been able to predict that this was not a short? A, use the strategy, the rating system to rate the gap. I rated the gap this morning. The gap rated 16 points. It wasn't over 20, so I knew it wasn't a short. Second, you watched it into the open. Here's the open of the live day. You see what this did? The open in here is 212.37. High up in here, this is in the first 3 minutes of the day, is what? Almost 214. The market rallied $2 in the first 3 minutes of the day. That's a stock swoosh. Now this is something that I teach in the class, and I teach how to play it, and I teach how to read it. That is institutional money that came into the market right away is into the open. And then the market rallied up and went all the way up to 217. So the point is, if you can go in the right direction of where institutional money is going, you can very easily make money. There were some people that shorted this market today. How do I know? Because the market did gap down, because people thought it was going to fall, because people were short the market already from the last 2 months, like I talked to you about, and you did have this drop off in here, but this was not something that you want to do. You want to do this. You want to do the move up. You want to do this. You don't want to do this. And this is what many traders don't understand, because they think, well, I'll just do this little thing and I'll do a scalp or whatever. No, you have to think in your head, who is in control? Who is in control of this, and where are they going to move it? So you can get in the trade and take the trade and make money very effortlessly, very easily, which is what I do many days when I'm right. That doesn't mean that every single trade I take works. Sometimes trades don't work, and there is absolutely no reason. No one could have predicted what happened in the presidential election. No one at all. But the fact is, it did. Stocks is a lot easier to predict. Now, let's talk about something else. Oops. So, is it possible? Is it possible to do this? I talked to so many people, and I just created a name, and I'm going to call it, like I said, the Trump phenomenon, because he won. Because Trump won the presidential election, and a lot of people didn't think that he would. In fact, the polling, all the way up to the day before, had Hillary Clinton way ahead of Trump, or at least slightly ahead, or enough ahead that people did not think that he would win. So the important lesson to be learned from the Trump phenomenon is that anything is possible. Anything is possible that you want to accomplish and do in your life if you want to. Do you know that every time that Trump gave a speech, he kept saying, we're going to win, we're going to win, we're going to win. He was manifesting the outcome which he desired, which was to win, to become the United States president. But guess what? He did it. He did it. I was so excited last night watching it live at 2:45 in the morning or 2:43 in the morning when they announced it and he gave a speech, because this is so important for people in their everyday lives to believe and understand that they can accomplish fantastic, incredible, unbelievable things that you'd never think would happen. Is it easy? I'm not saying it's easy. He fought hard to win. He was out there working hard and working hard and working hard, and he did it. The problem is that sometimes people work hard to become traders and they never do it. Why? Because they really don't believe that they can. They do not believe that they can be winners. And every time they lose, the thought process that happens in their mind mentally is that they're losers, that the market's going to take their money, that they're not going to win. So then that thought going over and over and over in their mind creates the manifestation of them losing and not making it. And that is not going to get you where you want to be if you want to make money in the market. I don't care if you want to do this for a living, like I said, or for part-time. You want to spend any of your time, you want it to be worthwhile. You want to invest your money, you want to turn it around. Some trades are big trades, and I make thousands of dollars. Some trades are baby trades. I make a couple $100. Some trades are medium. You never know. But the outcome that I desire whenever I take a trade is that I believe that I'm a winner, and I manifest it in my thought process before I take the trade, before I get in a gap like Facebook or Google or Amazon or any of the things that I've been trading. So the bottom line is that there's a huge lesson for people to learn that's exciting because it is real, visible proof in the world, because a lot of people didn't think he would win. And he did. So that tells you that anything is possible. So if you think you can't make it as a day trader, that's false. That's your belief system that you can't make it, so then don't even invest a dime. You've got to have the right belief system to create it. Just like I was saying, every time that Trump spoke, he said over and over and over again, we're going to win, we're going to win, we're going to win. In fact, I remember hearing him say that like at the beginning of the year. Maybe it was even last year. The first time I heard him say it, I thought, he's manifesting that this is going to happen. And people ignore that. People just completely blew over it and ignored it. The market itself, I'm going to go back here. The market itself is amazing. I mean, I just love it. I love gas, but I really love reading the market, and I love being able to predict things. Like the fact that I was able to predict what the market would do in this gap, and that we will now go and make a brand new all-time high. We're going to make a brand new all-time high before the end of the calendar year, and I'm sure most people didn't think it. We can do it tomorrow. We can do it by the end of the week, okay? It's not even Thanksgiving. We have so much time left. This seemed impossible to people so long ago. Months ago, and even up here when we couldn't get over the high, but it wasn't impossible. So if you were able to predict this, you could be making money. You could be up, you could be long the market, you could be long strong stocks, you would not be short. So the idea is that you can do this, it is possible, but you have to be practical. So that goes back to the other thing that I want to talk about the Trump phenomenon. One of the things that's incredible about the fact that he won is that he's not a politician. He's not a politician, and he won. So it was a big upset by the political establishment and the government, because here's this guy coming out of nowhere that has never held political office, and he won. So it just goes back to the same thing, that you have to use common sense. A lot of people don't like a lot of things that he says. It doesn't matter whether you like him or hate him. He's got a job to do, and he very well may end up doing a great job or a good job, even if you don't like the guy. It goes back to common sense. A lot of the things he said and the reason he won resonated with people because they were based on common sense. So it was not just the plan of action that he had to win. It was the plan of action, the manifestation, and the reasoning behind it which was based on common sense that there's a lot of broken things in our country that need to be fixed. And I don't think that any of us, whether you're Democrat or Republican, where you voted for or not, would disagree with that. So the fact is, if you want to be successful as a trader, it's very similar. You have to have a plan of action. That's the strategy. You have to have the right mindset. It's that you're going to win, not that you're going to lose. That the market is something that can pay you. Because if you think it's going to take your money, that's exactly what you're going to create. So you have to have the right mindset. And also it's based on common sense, what I do. Because I am in with the people that are controlling the stock, it doesn't matter what I trade. Any trade I take and any gap I do, I'm looking for the control, and that's what I read when I take a position. And you gotta be with the control. Traders want to get fancy and they want to do tricky things and they want to do all these kind of tricky things. They don't work consistently. Okay? I never made money in the market by dumb luck. It's never happened. Never. Not even 8 years ago when I started. It'd be great to say that I did, but it doesn't work out for me like that. I only make money when I get it right. I don't know, maybe that was like a sign, because even at the beginning, I never made money with dumb luck. I always made money doing something that made sense. And the common sense part of this is that if you are with institutional money, you go with the flow of it if it's up, or you go with the drop and you short it if it's going down, like the Facebook. So I don't know if we can get any questions here. Can we take any questions? You want to read me off some questions? We'll see if there's any questions here tonight from anyone.
Do you trade futures also? What is this touchscreen? These are not really.
I do not trade futures. These are my charts. This is, I'm in the process, and everybody will get more information of rolling out a show about the stock market. So contact me for more information if you want to hear about that, and I'm going to teach. You can email me at melissa@thestockswoosh.com about that. In the meantime, no, I don't trade futures because I trade the U.S. stock market day trading and doing options. That's what I do. Although you can use my method for futures if you want to. Some people do. I personally don't. Next question.
What is the touchscreen you're using?
What do you mean, what is it? It's ViewSonic. It's a huge, massive, amazing screen that I'm working and using.
Can we make a living by doing options with gap strategy?
Yes, you can. Yes, you can. In fact, I just did a fantastic one in Google in the last week, and it was just a quickie. I can do them sometimes really quick, and I'm in and out in a day. Sometimes I'm in and out of options for a couple of days. So it depends how long you want to play. And you can do options out for weeks if you want, or if you want to do it. These ones like Google, they have such huge volatility. You could take the trade in the morning and get out in the afternoon. So yes, you can do that. Next question.
That's it for right now.
Okay, great. Does anyone else have any other questions that they want to go over? I'm just going back here. Now, I want to bring up one more thing. Let's see if I can. Maybe I can't. Okay. One more thing I want to talk about, and then I'm going to let everybody go tonight. This is you, okay? Oh, that's what I want. Sorry. This is you. Okay? So you have a goal. This goal is over here. Okay? So this goal in your mind is money. Okay, whatever it is. This is your goal. So here's you, and this is the goal. The thing is that this is really not the goal. Now just listen to what I'm saying. This is the last thing I'm going to say tonight. It's very important. And when the show starts, I'm going to teach a lesson like this to close out at the end of each show. This is not the goal. Okay? This is actually the vehicle to get to the goal. What really is the goal? Can anyone guess? What is the real goal here? Money is not the goal. Money is the vehicle to get to the goal. The goal is happiness. Okay, this is a rainbow. The goal is happiness. You are happy. The sun is shining, okay? This is you over here. You could be sitting in a pile of money and be absolutely miserable. And by the way, there are a lot of wealthy people that live in the world that are miserable. They're miserable, they're sick, they're unhappy. Every day, they hate their lives, they don't like what they do, they don't like their job, they're stressed out, okay? There is a lot of wealthy people, even in this city, even in New York, okay? That have tons and gobs of money and are miserable people and unhappy and they hate themselves and hate their life. When you're trading, a lot of people forget, you're trading to make money. But if you have the right mindset, if you are enjoying it, if you are happy, then you're going to get the money faster. So if you are thinking that this thing is hard, trading is hard, and you're never going to get it, and it's then the chances are you're not happy, you're miserable, you're stressed out, and therefore you're never going to get the money anyways, okay? So ultimately, the money is the vehicle for you to be happy so that you can enjoy your life, pay your bills, do fun stuff, spend time with your family, not have to work 60 hours a week. And by the way, trading is a great thing because you can do it very quickly in the morning, like I said, in a half an hour a day and get out. And the options, I'm just in options trades lots of times just in for a couple of days and then I'm out. I don't even have to sit there and babysit it. So think about what I'm saying because we trade for money, but we do it. We want to make money, obviously, but it's a vehicle to something else to further improve our lives, which is to be happy and not have to be a slave to a job or a boss and actually enjoy something that you can do and make money for only a short time of the day. One of the reasons that I'm so happy that I discovered trading and it was totally worth it for me to figure out what I know, even though it took me a couple of years to do it, is because I worked so many hours at my previous job, my previous career, which was mortgages. I worked 7 days a week, with realtors and people, and when they were off work, I worked nights, I worked weekends. I don't have any of that with the market. So my hours are so much better now, and it's one of the best reasons to trade. If you are working like a dog night and day, you might not be happy. You might be miserable. And this ages people, okay? It seriously ages people when they work and they're unhappy and they're sick and they're stressed out. And so, the bottom line is, you got to think about that when you're doing it. Because sometimes what happens is people say, well, they start out and they say, oh, this is challenging. And if they don't make all this money right away, they just want to quit. You know what? You can't. You can't. Because this goal here, this rainbow, this happiness, is a fantastic goal. And it's worth learning from me, paying for my class, which by the way is $5,000, so it's real money to even learn from me what I know. But it's time in your life too. Time you're going to invest to learn it and do it. And then do it in the morning. Monday, Tuesday, Wednesday, Thursday, Friday. But the goal is huge because it's not just the money. It's the idea of having a career you can enjoy, not having to work so many hours a day, not being stressed out, not having a boss, working from home, working anywhere in the world. You don't even have to live in the U.S. to trade the market. You could be anywhere, again, like I said at the beginning, with a computer and internet connection and a trading account. So this is worth it because many people will never have fulfillment in their lives, which is the money and the happiness and the freedom to do whatever they want. You can get to that point, I'm telling you. Any other questions?
Yeah. What kind of trading setup do you use? Breakouts, etc.?
I don't do any breakouts. I only do gaps. Let's go back to the charts. This is the only strategy I trade. It's based on stocks gapping. I use a 26-point rating criteria to rate the gap. So I only trade gaps. I'm not doing breakouts. I'm not buying support. I'm not shorting resistance. You can look at those things. That's fine. You can look at them. But I'm not doing anything at all unless the daily chart of the stock, or let's go to the one I did the other day, it was NEM, is gapping. This was a gap the other day. So I'm trading only one strategy. It's based on gaps. It's not a breakout. It's nothing else other than gaps. But I'm applying it to day trading and also options trading. So here was a gap. No, where did it go? Here was it. Here. Look, this fell today. Look, the market rallied today and this thing fell. This thing's really lower. This was the other day where I did it. It was Monday. So the stock gapped. It closed here the night before, and then it gapped down. You see this green bar here? Let me make this bigger. That green candlestick where I have the pointer, okay? We closed there at 37.80, and then in the morning I got up, I rated the gap, boom, it opened at 36.82, and then it dropped. It dropped right into itself, and it got out. That's all you need, just this one little boop, and it was out. It was out before 10 o'clock. Any other questions?
Yeah, one more. What's an average daily trade for you in terms of income? $300 a day?
It depends on your risk. I'm risking an advanced amount. If you want to do that right after the class, you can. I risk between $1,000 and $1,500 in my day trades, and in my options trades, I've been risking anywhere between $3,000 and $5,000. I found that with the options trades, I'm risking more because I'm doing some of the ones like Google and Amazon, and some of them are expensive, so I want to take a good position size in them. So I'm taking some of them 2,000 to 3,000 shares, and it's based on the position of the cost of the contract and options. With day trading, I'm trading anywhere between 3,000, 4,000, 5,000 shares in some of the positions. It's based on whatever you can afford, but I'm risking more than $300. But what your return should be on risk on the day trades, okay, this is not the options, you should be looking to make 2 to 3 of every trade you take. So if you want to risk $300, your goal every day would be between 600 and 900. If you want to risk 1,000, your goal every day would be between 2,000 and 3,000. For options, it's different. It's based on a percentage of return on investment. So for example, if you risk $3,000 and you make $3,000, it's 100% return on investment, and that's good. So it's different than options with the equity trades as far as what you can expect for the return, because one is return on investment, one is return on risk. Does that make sense? Oops. Any other questions?
That's it.
Okay. Thanks so much for coming, everyone. I really enjoyed talking to you tonight. Again, my name is Melissa Armo with the Stock Swoosh. If you are interested in my Golden Gap class, the next class is right before Thanksgiving. It's November 19th and 20th. The cost of the class is $49.99, which is almost $5 grand. You would learn in that 2 days on Saturday and Sunday. It's a 16-hour class. Everything I know about day trading. My whole method, how to find the gaps, the rating system, how to take the entries, the targets, the stock swoosh, you learn it all. I don't hold anything back. And then if you want to trade with me in the live daily trading room, I'm offering the room free for 1 year. You sign up early for the class by this Friday. So tomorrow's Thursday and Friday, you have 2 days if you want to do it. And then you get to trade in the room with me, and you get my trades and calls like Annie M. So that's the scoop. And look for more information on the upcoming show called Make a Million with Melissa, where I'm going to talk once a week about the market, about gaps, about stocks, and we're going to do lots of fun stuff. I can't wait. If you really want to do this and you're serious about it, though, you can feel free to call me. You can feel free to email me at melissa@thestockswoosh.com, and I appreciate everyone tonight for coming. Thank you so much. Have a great night.